Hey, buddy. Give me another one of those. No. I need that. Let's go. All right. Let's go, guys. All right, everybody. Last show of the year. What's going on? Great to see everybody. Come on, let's get it. Step on in. Let's do this quickly and get it done and move on with our day, year, life. Everybody, get over to harmonictrader.com. You know what I'm going to say. Get with the software. Listen, the final discount. I mean, I don't even know why I discount, but, you know, it's a Black Friday, Cyber Monday holiday thing. Get the software, okay? Send your TradingView username to hpc@sr-analyst.com. My partner Chris will take care of you, get you 2 weeks free trial. We'll give away a couple of 60-day, call it 50-day, and a 50% off for one or two people if you're really into it. So we'll do that in a little bit. And yeah, what you guys want to look at, sure, because we're gonna do a quick review of the major markets and you know what really happened this year, what's going to go on for the new year. Yeah, silver pretty crazy, right back up again, and we'll get into those. You know, Nasdaq's kind of bouncing all over the place. Had an early thing this morning, but then kind of gave up on it myself. I'm just taking these days, guys. I'm really just kind of a market observer. Took a trade this morning, but that was about it off of this retest. It's just, you know, kind of shows you how quiet things are. You know, bouncing like 50 points left and right, up and down, but that's it. Not really trending. I think that the big thing, though, to talk about, really kind of a year in review, are the big patterns. Where were we a year ago? What were we looking at? And what should we be thinking about for 12 months from now? Because, you know, it was absolutely magically harmonic year. And here it was, you know, again, go back to right where we were, you know, there you were, amazing. We're 21,000 on NASDAQ futures. And we had that dip. That incredible dip down to 17 and, you know, made it to 26. So just remarkable year. The patterns were screaming this time last year. And even the, you know, the QQQ and the SPY, which is probably, I think about this time last year, we were talking about that this was, without a doubt, the most important pattern at that time. And so just to catch up, you know, remember, folks, we were here exactly, okay, beginning of January, and dealing with that deep crab, needing a type 1. So let the framework, long live the framework, quite frankly. Long live the harmonic framework. And I think this year, if there was any doubt, let there be no doubt that, you know, when we're looking at a type 1 pattern on any time frame, we got to respect. And that's what was going on there. So after the type 1, guys, on SPY, and this is pretty much for all markets because we saw it in NASDAQ, we saw it in the Dow, and we're still dealing with it. But amazingly, after the type 1 reaction, here is the first place where we actually have confirmation, and that retested and triggered like the end of October. We're still dealing with it. So technically, we are at a type 2 off of that big weekly, and I would say monthly pattern is probably better. It's probably better to look at it from a monthly perspective because the pattern was more just absolutely standout, perfect in terms of confirmation and doing the T1. And if you guys remember, 482.25 was the level, and the low was 481.80. Again, guys, this is why you get the software. And I offer the software really as the solution, as the end-all be-all solution to kind of avoid and basically destroy all harmonic pattern scammers, which there was a lot of harmonic pattern scammers that made the methodology look like garbage. With the software, with the levels, it's pretty clear. And after what happened this year on the SPY, we're going to be not only following framework, but using this pattern, this exact deep crab on the monthly for all the markets going forward. I mean, clearly we're failing on a monthly basis, and we can look at much bigger levels, higher targets to come. The other kind of aspect that we're looking at currently off of these big monthly patterns is a simple 1618 extension. Where does that get us? Let's try it this way. There's X, there's A, B. 1618 recovery is still up at 698, 700-ish. And, that's definitely the next level for the coming year. Clear out this 700 level, get up to some higher targets. But I think early in January, I've been saying this for several months, we're probably going to have to digest early gains, digest the gains of 2025 early. So I'm expecting, a little push higher and then hit the 1618 and then let's deal with it. Yep. We'll go to silver. I mean, we talked about all those gold. Remember, we'll get to gold in a second, but remember where gold was? And then what that did, and silver especially. So that's probably, the pattern of the year, the SPY, okay, monthly deep crab with the type 1, which is what we were looking for. Go back and, go back to early January, go back to literally 1 year ago and see what we were saying. We had to deal with this confirmation, everything that came together, and then finally got the trigger early January with the check back and then the breakdown. These are going to be, again, we will continue to kind of follow this strategy of confirmation, pattern levels, confirmation, and then tracking HSI, which is pretty remarkable. The 50 level broke. And then the amazing thing, though, to be mindful of is that on the longer term basis, we never even touched the 50 level on amplified monthly chart. So that bodes well for the breakout failed continuation argument. I mean, guys, this bull market will be, and the simplest of terms, will remain intact until we see a monthly reading on amplified RSI that cracks the 50, and that's all the way down here. And it would literally have to crack the 50. We will have pullbacks along the way. We'll look at the weekly chart as well. But monthly, again, last time we saw that break, you have to go all the way back to 2022. And that set up probably the biggest, it was the buy opportunity of the decade, which we were talking about way back then. Now we got to think about 2026, 2027, 2028. We are literally entering a sweet spot. You thought we were at a sweet spot. Nope. We are entering a sweet spot for these markets. There's HSI. I expect this to continue, and then off of the deep crab, this is another thing that we did in our session. I think it was June. And it's here on the site, it's on my page on YouTube, of what we do with these failed crab patterns. What do they morph into? Remember some of those terms that we use. 2618, again, we're 695, close to 700. But longer term, look, for the year, I'm thinking 314 gets tagged. And it's not, that's a 10% move. It's not, we're doing 15, 20% last couple of years. But off of the pattern, 314, and I would even say more like, just to get some levels out in front, 825 on the SPY for a 3618 extension. These are all possible. Okay, it's just all setting up where we've made that progress. We got to think of this in terms of the last 3 years, and then looking at this to continue for the next 2 or 3 and finish this this wave that started in 2022, or we could even go further back, but the immediate kind of setup is like that, and just ride this trend line, this trend channel up to the 800s on SPY. That's where we're going. Great to see everybody. What's up, Doc? Ruski, appreciate you always with the summaries. David, always thanks. The rest of the chat, what's going on, guys? Aaron, Claire, everyone else, great to see you. Happy New Year to everyone, and glad to have you here. Probably not going to do a session on Thursday, New Year's Day, and we'll just kind of get back into it next week. But those are the big markets, equities, stocks, SPY, QQQs. These are all in a larger extreme harmonic expansion, and that will continue. Weekly, Dow Jones Industrial Average, the diamonds, exact pattern on the weekly that we saw in the SPY was a type 1 crab pattern. The other one was a deep crab. This is just a regular crab, doesn't matter. It's still a type 1, clearly, perfectly at 372. And then we take it up, break it out. No confirmation. Like there has not been a single bearish confirmation signal yet. This is on track for eclipsing. I think by first half of the year we should see 550K on the Dow. Let's just get through this immediate little pause. That's all it is. The Dow has actually probably been the smoothest of all the markets. And you look at what's going on currently. What's the last pattern looking left is a bearish bat pattern that has absolutely exceeded any 30 bar limit. 30 bars was like there. And what did you get? You got a sideways action, counter HSI, and again, look at the last 2 signals. Daily bullish continuation against a bearish pattern that sends it higher. That was the signal though back in August. A little dud reaction. I mean, really ideal confirmation, guys. Arrow, diamond, dot is that those 3 have been powerful for the confirmation, but all it could muster was this sideways dud. And even if you didn't know, by the time you hit day 30, you knew this thing was losing its mojo. That's the way to think about it. So it's like here looking left, then we get to 30, and it's just beyond 30 keeps trucking higher. That's what's going on. And this is going to be one of these trending markets. I mean, the Dow diamonds. Okay, what's the trend? What have we done the last 2 or 3 years? This is going to be kind of my way to repeat these principles and pound them into your head that, crypto does not look like this. And again, I'm being really discerning. More so, last year we were pretty wild with the crypto. Seemed like, Wild West was back. I'll go to Bitcoin in a second. But ultimately what happened was that stocks are finishing and holding their own above and beyond anything. I mean, even Bitcoin, even Bitcoin, and that's going to be a trend that I think just gets stronger. We're not, you're not going to see crypto recover. In fact, we're into a bear year for crypto. Here's Bitcoin. And as we start this year, coming up, you need to be aware of the cycles that we've mentioned, 2026 into 2027. That's supposed to be an off year. I mean, just by their own cycles, by the same people that told you we were going to go up we were going to go up in 2022 because of the off year was almost over and this new cycle was beginning. You have to embrace the same thing. I did put 1 second. Let me show you guys again. Yeah, that collection of charts that I have on X, because that really shows it. And so go over, if you're not subscribing or following me on X, please do so. Let me go back. Where are we here? There you go. So about 2 weeks ago, I put this up, and again, refer to the cycles. Okay, every 4-year pattern went up, did an exponential move, and then followed by a minimum 786 retracement. Some went a little bit more. That was a 2011, 2015 exponential move, way beyond a 3618. Okay, but here we go again. 2019, 786 retrace. Again, 2023, 786 retrace. Now, 2027, 786 retrace. What would that be? It's sub 40K. It's, it's 38, 39K. And that just continues. And I think that we'll take it in chunks, but, you can't really be too constructive on what's happened in the last 2 months of the year with Bitcoin, and it's not anywhere near all-time highs. If anything, this thing is just begging to kind of retest some prior patterns. We're going back, doing this looping thing. You guys know that I've been talking about this since October of why we needed to go to 93, then 83, and now 76-ish. And I'll deal with the lower targets possibilities later in the year. Just get me here. Just get me down to 76 and let's take a look. And that's where we're going. I mean, I don't care. You can scream liquidity, QE, whatever, liquidity cycle. I just kind of, it's almost like these major guys are doing a disservice. Just kind of wrecking their credibility by looking for some 5-year anomaly of what Bitcoin has done since its inception. So it's just, I stick to the levels here, guys. This isn't so much my opinion as my strategy, coded with strict algorithms, pure levels. And I feel like the only thing that I missed on Bitcoin, the only thing, and I didn't really miss it, but the only thing we didn't get was the 3618 extreme expansion, which I felt for about a week, maybe 2, that we would actually see it. And if you recall, a year ago, we were coming up to the long-awaited target, which was our 1618 price discovery minimum, which was like 1025. You remember that number, 1025, with a top-end limit of, oh, where'd you go? Get me back here to the 1902 level. So if you guys remember that, and I think with all of this in the last few years, we've been spot on. The only adjustment that I had to make, and I made it pretty, I kind of downshifted on this pretty sharply after that early October kind of crash, if you will. It was a flash crash, if you will. But we were still stuck in this whole 1902 area. 1618 was there. 1902 was, I mean, it was so close. That was like right at the top, the 1902. And that was our range. That was our minimum kind of anticipated target range for then to go break out and do a minimum 2618. And again, flat out, all just harmonic levels, climb up the ladder. It was 155, 160. I don't know why it's 166 here. Oh, it's probably just slightly different data feed. It doesn't matter. That did not happen. And so that is the other kind of takeaway from 2025 on Bitcoin. That for the first time since its inception, we have not seen extreme harmonic expansion waves like the last target from there to there. And, our 3618 from the last cycle was right at 60 something K. The other targets, the other cycles, sorry, they did a 3618 or more. They were more like exponential cycles. But now, with only a 1618 on this cycle, you have to start thinking maybe this is diminishing returns longer term. And if we're going to do a 786, that for sure is the case. That longer term, the assumption that Bitcoin is going to repeat performance cycles year over year, percentage wise, is probably an incorrect assumption. The fact that we could only do a 1618, which is what happened, and we got all the way there, and now currently at a 382 off of that. 382, folks, that's like 82, 83K. Okay, that's your line in the sand for the monthly chart. One more, if we got to see what January does, but it's going to be obvious you break down under these levels on a monthly candle with a fat red candle to boot, some kind of close underneath here, maybe January, maybe February. That will seal the deal. And then you're looking here, you're running the retracement ladder, if you will, go to 50. Okay, so once we get under 83K, a 50% monthly retrace is like 70, which matches up with like a low end on the 76K, and then take it all the way down. The historic repeat of a 786, I'm going to put my life's work on that, especially for crypto because it's been so harmonic. Either way, minimum targets, okay, are lower once we crack 83. And I would say since that was a 1618, we should see a minimum 618 monthly retrace. 2026, that's like 58, 59, guys. So that's where it's at. We could finish the year, maybe tag some deeper targets, and then reset, but I wouldn't sit in there for a 30% retrace, 40% retrace from current levels. I'm not constructively bullish on crypto in any regard. And just let's look at some of the bigger crypto, because I think we're going to be leaving crypto in 2025, quite frankly. If Bitcoin falls apart and breaks 83 and then breaks 76, which is what is probably going to happen the first month or two of the year, you're going to need a lot of work to turn this around. Ethereum, same kind of a deal, could not break out. I mean, not only could not break out, but failed the breakout, all-time high of 47K. And your best assumption for Ethereum, if you're going to say, hey, Ethereum is still in an uptrend, well, come on back down and retest this long-term trend channel, long-term trend support. And again, I think that's like 2K early in the year. Those are numbers that have to get tested. One or two more things that I've said for a while, just kind of repeating myself, but they're going to come to fruition, I think, pretty quickly. And when they get down there, people will be surprised. But you got to look at Solana. At a minimum, needs to come down to 106, currently 124. Still down. Nothing changes there. The other thing about patterns looking left and the inability of a lot of the stuff to even hold their gains is that you've got a couple of immediate patterns. I'm more concerned about Solana failing 108, 106. And if you see that dump, look, there's nothing but air. Air and a prior pattern looking left at $49. I want to let you guys know this is what I'm thinking about crypto. Deeper retracements, prior cycle patterns that need to get tested. That's Solana. That Solana to 100, if not there, then 50. Ethereum back to 2K, if not lower. Bitcoin back to 76. And this is just me reading the charts. Looking at lining up all of these and saying, okay, where are the patterns? Where are the levels? XRP, okay, 187, firmly below $2. And my concern with XRP, guys, is not 180 or 150 or even $1. The only possibilities here looking left are under $1. Go back, retest these like Solana. And I know this is like, blasphemy for a lot of XRP holders and people hopeful about the ETFs. The Harmonics are saying otherwise. And the Harmonic's saying, why not go back, retest that support level in a looping retest of a type 2? That's all the way back at 31 cents. I know that sounds crazy. But, for me, XRP, it's not worth 100 billion or 150 billion. And then you've got this, and I would say this is probably the one that I think is going to have the toughest year of all, which is Cardano. Still at a $12 billion market cap. I don't even think this thing should be $1 billion. Total garbage, technically and otherwise. I'm looking for Cardano to get back under 25 cents, guys. If not lower. You're currently, 35. We're already there. My concern is that Cardano wants to come back and go under 10 cents. I know this is crazy, but there is nothing but down here, and the failure. I can't tell you how big of a failure that was. The fact that, and this is the way to read it, what this really was, okay, we never got above it. It looked like, it had a chance, and we broke support, but look, that's an all-time 382. That was rejected. Send it all the way back down, 886 level. We're there. We're already at the 886 minimum. But the fact that this was a 382 off the all-time high, what that says to me, all this was a dead cat bounce. Not constructive at all. No way. You're not forming anything. You have no confirmation down here. And I think this is the year you see these things bleed out. You'll have remnants of crypto left, but I just don't like this. These charts are what they have done at the last 3 months of the year is basically break structure and break all possibilities for a larger cycle. I'm looking at the same chart as all these big influencers. I'm not seeing a fifth year. I'm seeing the end of the whole phase, the whole crypto thing. Stop loss at what's up, Echo Leaf? Stop loss at 83K? No. If you got to decide for yourself. Okay, but if we start leaking under 83, if you print 79, forget it. For all of this, the end of the show kind of thing that started 10 years ago or 15 years ago looks like for most of them is coming to an end. And I would translate that to stuff like Coinbase and MicroStrategy, more Coinbase than anything. For me, what this would be is it's a lot like Solana, a recovery candidate. Okay, could not break out to all-time new highs. A perfect type 2 on the bat. And so Coinbase to get to 150, guys, it's not a challenge. Currently 234. There's no long opportunity. You're in the midst of finishing a rather nasty type 2 reversal, which is exactly what's going on there. Keep an eye on all of those. I'm not in no way constructive on any of it. You look at, things like Mara, look at that, ready to go back to $5, now $9.53. All of this progress from the last year or two was destroyed just in the last couple of months. And at this point, the whole thing has to reset. Damn shame. But that's it. Let's take a look at gold really quick. And gold was owned the first half of the year, and silver owned the second half. Gold, where were we? Amazingly, a year ago, right now, 2,700. Wow, 2,700. Almost a double. And I just, those are insane returns for any metal in one calendar year. I do think we are getting really close to just some major top end levels. I mean, you guys know that we've been talking about like this long term 3618. 3618 is like there, is like 4,200. We're still above it, but at some point, we're going to have a larger retrace. Silver, by far, percentage wise, even better than gold. That was a year ago. That was 30. And that was more than a double. We hit 80. We backed off. Oh, wow. We're up 750 today. We were down $5. We were down $5 yesterday, right back. And let me go to the hourly, or maybe just a 5-minute chart at this point. Yeah, that's remarkable. But silver too, guys. It's up at some targets that we have mentioned before. Remember, we were talking about silver with the monthly pattern here. If I can show it to you, come on. That's all sticky there. There you go. It was a bat pattern completed back in like 2020 or so, amazingly at 11. What we hit was a 1618, and we're reacting, and that 1618 generally in this 80 area. Let me get that right here. There and there. 1618 was like, no, hold on. Yeah, 1618 on that is like 71, 72. We're currently 77. I'm looking in that general area. It's a 1902 overspill as well. Between 72 and 82, roughly. I think we're at that level. I mean, you're up 10% today. Great. I trade it at this point. I don't know if you could really buy it comfortably and sit on it, especially if we get a pullback. We seasonally, I told you guys, November, December, January into February were the seasonal bullish months. So maybe we've got another month to go. But, silver, for what it's done so far this year, I am looking for this to start to get to some resistance, and then just wait. We're going to need some kind of oversold trigger before that continues. Just like what we had back here in November at 44. We had those bullish continuation dots right there. And we had an arrow there in August, and probably May was the best place at 30 bucks. It's gone too far, too fast for now. For me, let's just be patient on it. Yep. JWS saying crypto always has a feeling of, oh, it's done for. When it pulls back and then randomly spikes 30% and then runs. I don't agree with that. This year failed. This year it failed. Bitcoin really failed. Really, and the rest of the crypto space, okay, especially a lot of those coins that were monster winners in 2020, they did nothing. And so you have to look at that larger picture of sustainability, and it's not happening. And so if Bitcoin gives up its gains this year, the whole area, the whole space, the whole sector is going to have substantial problems. I'm not, I've been like this since the second week of October, guys, and I only find myself reinforcing that argument. Yeah, no, I agree with silver. SMP is saying he's not in a hurry to sell silver. I'm not in a hurry to sell it either. I just, for that next larger swing move, I would need more of a retracement. You could trade it. SLV is a great vehicle. We've talked about this all year. But that's just straight up, guys. I need something. I have to wait for a pullback, before I could even strategize where's the next place to jump on. I mean, yes, it could still run higher. I just don't, you're chasing it up a ladder at this point. What's up, Leaf? He's saying 143 to maybe 200 silver. That's actually, I said that last week. I know some industry people that, some of the insiders are saying they think silver to 150 eventually. And that may be the case. I'm still going to wait for a pullback. Give me some kind of signal like what we had here in November from the 20th. I went from 45 to 72 on SLV. I'm still going to say we're overextended. What's up, Greg? Happy New Year's to you. Also to James. What's going on, guys? Greg's saying Jed McCaleb. What makes him transparent while secretly dumping $5 billion of XRP systematically for years? Yeah, guys, you know what? I think what we're realizing, hard assets are winning. I mean, stuff, tangible, hard assets, silver, gold, platinum, palladium, even copper. If you can't afford a bar of silver or a bar of gold or a gold coin or whatever, go buy a bar of copper. For 40 bucks or whatever it is. It just seems like that's going to continue to be a problem. I mean, here's palladium or platinum, palladium, they kind of trade together. A little thinner market, but yeah, and platinum, remember this? Remember platinum with this amazing similar bat pattern way back here at 885? Did nothing for almost 10 years until doing this. And platinum's trying to get through 2300 all-time new high, not clinching it, but I'm not buying that. I'm not buying a chart that looks like that, guys. There's no entry. You're chasing it up a ladder. It's up 140 today. What was that? We were looking at PLG and a couple of these others. PLG, not doing much. Some of these miners have not really moved. PLG, yeah, we talked about this. PLG is still a type 1 bat. Give me the XA level at 188. So I hope so. I hope platinum can glow price discovery, but not so much, not yet. CDE was the other silver one that we've been talking about since this last retrace. And that's going to be the continued strategy, guys, going forward. We're going to identify those assets, those markets that are trending. We can say, hey, we can go back a year, 2 years, 3 years, and easily draw the fact that this is in an uptrend. So at that point, unlike crypto, okay, we can't say crypto's doing this. But we can identify those markets that are, and then size up diamond, oversold entries like that, or here to jump on the train and continue to ride it. Okay. Said this last time, I'm mostly out of crypto. I'm not going back in, and unless I saw something truly dramatic, it's just will not be spending much time on it, flat out. And then I think what's going to happen is people are going to get burned. All those people that are still calling for a year 5 and saying it's a global liquidity cycle, they're going to get burned. Yeah. What else? Big markets. Well, in terms of big markets and big stocks from this past year, I think Tesla's up there. Got to be up at the top with everything that we talked about. Remember Tesla a year ago. This is what we were anticipating. I mean, Tesla was a type 1, perfect. And we were back here December, January at 444 saying, look, this has got to do a type 1. And got all the way to target 2. Then did the return move. And I think Tesla is going to be a big winner, but it will only happen after we get through this type 2. So right now 460, top end at 488 was tagged recently. That was the prior terminal bar. You've got a lot of confirmation here where I do think it's not going to break out just yet. Can we get something like this into the new year, and then Tesla really will skyrocket? Tesla's done everything I've asked of it. I expected it to do. We do need to resolve this type 2 on a weekly deep crab, but once we do and we clear this out, Tesla's long-term trend, guys, is clearly up. This is just continue to project that to the right of the chart and up. And Tesla, I think after we get through whatever this next retracement is going to be into 2026, and I do think we'll get a sizable retrace, but beyond that, then I'm looking for this thing to go 1618 maybe this year. 1618, that's probably a good call. That Tesla hits the 1618 later in the year, and that's above 600. Beyond that, we'll wait and see. But I'm pretty comfortable with that kind of a thing happening. Others, Tesla, Amazon, Google, most of these are just kind of hitting some levels. Amazon incredibly at the 1618 off of the bat pattern on the monthly chart. But once we get through there, let it do its retrace. Remember, 214 on Amazon, guys, is pretty much the next spot to be looking for. It's a bullish pattern. We get confirmation down here, and it's just, retesting the bottom end of the trend. And beyond that, I don't want to really have to think too hard other than the mega cap. NVIDIA up here, same deal, 1618, 1902-ish. That was our call back, really. Remember, we were back here with a couple of bearish patterns early in the year. We had a type 1 and type 2, and then we had this crab pattern that launched it. So give me another bullish reading, a retrace. I do think like 165, it would be an ideal area. It's an all-time 382 for NVIDIA, for it to continue, essentially what you're looking for is this to be the final retrace before the next wave into the next 2-3 years. Right now, overbought and still needs to come in lower. You're going to see this on a lot of charts. A lot of charts. What do you guys have? What's going on? Happy New Year's to Mitch Ray in the house. What's up, Mitch? Hope you had a good Christmas, man. Catch you back there. We'll have to get out early January. What's going on? Everybody give Mitch a shout in the chat. And yeah, again, a lot of these markets that we've been looking at did what we asked them to do. That's it. They did what we asked them to do. And then we have these other massive big patterns, things like Target, old economy, that are sitting on monster zones. Here you go. Like there's the monthly Target. This used to trade like Walmart. We're going to get that confirmation. Looks like the dot is in from this month. And there's many of these that I find interesting, that there may be an opportunity for the first time in years on things like Target, but it's going to have to kind of do some things in the first few months of next year to really turn this around. Again, is this trending? What's it done? What's the last few years look like? Well, last 3 years is down. And I just treat it like that this is still down, still needing time to stabilize. I love the fact that, hey, harmonic pattern-wise, it's got everything. It's a T2, and now putting in a dot. Won't be official until next week. But there are these two types. You got the trending, which many of them need to come in, and then you've got turnaround plays that I'm not as crazy about, but I don't want to ignore. I think this could take a few months, a few more months, but it's a massive pattern. Yep. The other one was, I think it was Nike I mentioned. It has suffered for a long time. Last 4 or 5 years, it's down. And the weekly bat pattern, all the way down here in the zone, under 73. And we had a few confirmation levels like 67. We're trading 61, guys. So I'm monitoring this, but it not even something that we should look at until you can break this downtrend. Who knows? Maybe we go to 43 before this is done. A lot of these. I mean, there's just a lot. Like, again, the final one would be Starbucks. In terms of these massive pattern plays, this is pretty much range bound. You got to get to 73 to retest. That's a weekly bat pattern. Still could say that this is, hey, in the context of the long-term 10-year history, we're still trending higher. Okay, but come down, do the retest. Get it out of the way. All right, and if you go back last 3 or 4 years, it is like that undeniably. So we're not really, I don't say we're immediately trending. But, got my eye on it. A couple others. OKE. What's going on, Wayne? Happy New Year. Hope you guys enjoy it safely. OKE. Onic, right? I don't know how to pronounce that, but weekly, bad pattern. 69, but problem here. You have a counter HSI right now. Another one here where comeback retest under 69. I would still want some confirmation. I see what you have. I mean, it's back to back. No problem there. But again, back to back. Hey, let's give away a 30-day, or excuse me, HPC 50. HPC 50 gets you a 50-day trial and a 50% off if you're going to buy it. HPC 50. You got to contact me over on Discord. And where's that link? Nope, that's the wrong one. There you go, Mr. Satvik. You win, Mr. Satvik. You got to hit me on the Discord. I'm trying to get that for you. Put that in the chat. I'll give away one more. All right, and that you have to take advantage of that in the next 2 weeks. All right, so but you got to DM me. Yeah, and this is it. Everyone else, you can get a 25% off. Okay, and that code would be HPC25 on checkout. I'm only giving away one more of those. So HPC25, that will expire on Sunday. And that's the last discounting we will do. So this is it. Yes, the Black Friday was 30. This is 25. And then it'll be done. You got it. Let's go. That's right. A couple others. John wants to look at qubits. I think we definitely need to look at quantum in general. And so does my SFS. And then Chipotle. Qubits, which is D-Wave, is like this. Guys, it's a trending creature. Okay, the daily chart has some patterns here. A little overbought, but hey, we're on another trend line retracement with a nice pattern. So I'm looking at these because the quantum sector, I don't know if you guys follow that very much, but I would look at some of the tutorial videos, people, what they're talking about quantum and the breakthroughs they're having, especially the second half of the year has been pretty phenomenal. And quantum is the future. You're going to hear a lot of that in the next year or 2 years. Here's IONQ, which is probably the leader so far, and with just another bullish pattern, needing a little bit more time. We're 45, 46. Okay, you're looking for this to hold. Maybe an early January retrace, and then we get some confirmation. But still on an uptrend. You know, you go back 2 or 3 years, 2 years, it's like that. Still progressing. But the biggest quantum play is probably Google, guys. Google is definitely out in front. And that's why you see the chart like this. 314. I'm waiting for Google to get back to like 280. Somewhere there. Currently, retest 302, 285-ish, 290. Give me a dot here, please. Not chasing. But we want to look at these. You want to line them up. Let's get a couple on a pullback. Or if we get an early January, if we get this early January retrace, many of these that are setting up are going to hit. A couple others. What's up? Brewski wants to look at IFF. International Flavors and Fragrance. I remember that. Or fragrance and flavors and fragrances. There you go. He's saying there's a massive shark. Where? Weekly? That's the weekly. Monthly? I mean, I'm not. There you go, monthly. Okay. I would need to see a dot. No confirmation here. And again, you're talking 10 years in a downtrend. So in terms of priority or expectation of this turning around anytime soon, first of all, plenty of time before that happens. Like, I see what you're saying, but something like this is going to take months to turn around. I'll watch it, but you probably spend another 3 or 6 months down in the 60 to 70 area before it turns around. And the final piece I would look is HSI above 50 or below 50. and it's currently almost at the 50 level, but I don't even consider it until it's above 50. Take it to next month. And then I couldn't even expect price acceleration until Amplified cracked above 50. I like the idea in these patterns, especially stuff, old economy style companies that have been around for decades. They've done a 50, 60% retrace, but within the context of the last 10 years, we're still firmly in a downtrend. Let it go. Give it time. Yep. Couple more. Yep. Yeah, hit the like. Guys, hit subscribe. So you're catching what we do here. We're normally here Tuesday, Thursday, 12:30. I'm going to take Thursday off and then just get ready, get fire right back on Tuesday. Lululemon, here's another one, guys, that I know, despite the lovely women's wear and the yoga pants trend, what can we say about this? It's down. It's a downtrend. It's a multi-year downtrend. Nothing there. I mean, really, guys, there's just nothing there until we could see this thing. At a minimum, you look at a chart like this, just look at the software. Where's HSI currently? Under or above 50? It's still under. Cannot even begin to turn up until you get above the 50 level, and then here's Amplified. If you have no pattern, no signal, just look at where those two are. This is still under the 50, clear long-term downtrend. I'm not trying to be dismissive on it. I'm just saying put it aside, give it time, come back to it when it's developed a lot more. Yeah. You got that. What's up, Docs? What was that about? Hold on, I'm trying to catch up on you. Yeah, we can look at Oracle for John, Hanson, and Greg. Yeah, we'll look at that. Oracle, that was another one where for a minute it was up there in the Mag 7 and then came back down. I think monthly, weekly, we're going to get stuff like this. Currently getting a dot on the weekly. So we start to look, and again, daily has patterns down here. 190 to 2-ish, 205, 210. There's a couple of these patterns. Not really acting that well, but I think it's more about this weekly situation where, okay, we're getting a dot. First dot we've seen on the weekly, bullish since the last one, which was back in March, which was a major low, 116 to 350. Come all the way back to 180. That's quite a retracement, but there you go. It's like that and that and that one and even that one. So weekly dots on Oracle have been strong points of continuation. And yes, it's still in an uptrend. Despite the last 3-4 months, we're still in a multi-year uptrend. And I like Oracle. I like it like Google and Tesla, Amazon. The rest of them, other than like quantum stocks, guys, I'm not seeing much that's too enticing. A couple others. How about XOM? Yeah, XOM, I don't. XOM has been up here on the monthly chart for 5-6 years, which is kind of nuts. I mean, it really is. It's been an interesting situation because we have not moved, okay, since that peak, and that was, what, 3 years ago? And we're just hovering at all-time new highs. The long-term uptrend is intact. Okay, we never got any kind of signal, and we have this weekly bearish bat pattern. So Not yet. I mean, this has been sideways so long. I'd rather wait for the breakout. Like you get above 130, 135, then you could see much larger things unfold. But for now, ExxonMobil is a type 1. Get me back to 112. Get me back to 112 and then we'll talk. Currently 121. Hold me to it. I will say this. Look, crude oil has been something we've talked about where crude oil trending lower, 58. Okay, do we have patterns? Yeah, they're lower. Weekly hop levels like 52, remarkably. And then if you go to the monthly chart, you guys know that I've talked about this prior pattern down here where support at like 42.80 is the XA level, which I think that's where this is headed. So it's not 58, it's not 52. I'm thinking under 50 in 2026. Something's got to give. But we've been in a 4-year downtrend, and that's only, we're finishing the year at the lows. Not a great look. And I think if we get down here, 42, 44, that would finish it off. So I'm not really constructive on energy unless it's really trending. And you know the one that I like, the Valero guys. Valero's been kind of, that's, if you're going to play energy, go refiners. And this uptrend is still intact. We're going to go through another monthly, weekly retrace. You got a couple of nice things. And we talked about this pattern. Was that April at 107? So let's keep an eye on it. It's done for now. I like Valero. Let's see if we can get the next oversold signal and jump on it. You got it. You got it. Greg, have a good one. Celebrate safely. Absolutely. Mining, metals, airlines, steel. Wayne's given us a couple of top sectors. Defense. What do the airlines look like? Oh, that's Alcoa. That's all right, but what is American Airlines? Hold on. AAL. That's okay. I'm not a fan of the airlines in terms of in being a play in any regard. Normally these do not do sustainable moves. And that's exactly the kind of thing I'm talking about with crypto, airlines. Some people like to get long and, all right, airlines are cheap and a cyclical play, but you're not going to see these things. They're not growth industries. It's kind of crazy with all the traffic, but these are not cyclical. They are cyclical, meaning they go up, they have a defined limit of how high they can go. In the best of cases, they go up maybe for a few years, then retrace. We're at the bottom end. Even if this was to work out, limited upside here. AAL. There's better trending candidates to take advantage of. But I'll look at all of them. What about USX? United States Steel. All right, nice turnaround play there. But still only recovery, and you're at some weekly resistance. What's the forget what the other steel play was. Hold on, Steel Dynamics. Well, there's a trending. All right, tale of two markets. I would rather be looking at Steel Dynamics than US Steel. Just based on this long-term trend continuing. I'll have to keep an eye on that. We're overbought at the moment, but that is really kind of defines a trending situation versus a recovery situation. big deep crab. I mean, Steel Dynamics is, here's another one. It got overextended. 177. Can you get back to T1 at 149? And then do the return move. But at least this whole collection of patterns are still building within a long-term trend that doesn't retrace 50, 60, 78.6%. Steel Dynamics will go higher after the retrace. Yeah. Look, I think we're there. Guys, we're at that point here where had a hell of a year, and we got a lot of things that are shifting underneath. Some things are getting pushed away. Some of the trends of the last few years are going away, and one of them is crypto. Crypto was a trend. It's not a new industry. It is a fad, and it will have a place, but it's going to settle down. All the adoption, all the news, everything that people have talked about has been realized, and what? We could only do a 1618. That was it, with everything and the trillions of dollars that this has attracted. We could not do an extreme harmonic extension. And here we are, Bitcoin at 88, been down here for over almost 6 weeks now. That's not bullish action. And so that would be the big call for 2026, guys. We see much lower lows in all these crypto plays, if not complete eviscerations. Like that's my concern with Coinbase, Strategy, a few of these others, these miners, where they just give it all back. I mean, IREN is the one that comes to mind here, where IREN guys did this crazy move. That was probably one of the best miner plays, not because they did crypto, but because they went to a data center model. And then look what happened. Went parabolic. We know that. Look, where's the extreme harmonic expansion? Or 3618. Right there. 3618 was like 47. Okay, that's it. We overshot it, yeah, but right back down. I'm thinking IREN could do a full 886 retrace. All right, that's it. Not sustainable. We're re-seeing it kind of on the back side of the slope here. And a full 886 reset. 12 bucks. Currently 40. And it does not help that we registered overbought on HSI on the daily already. That means this whole little bounce registered and got overbought quickly. So these are all setting up in a way that, for me, crypto and toxic assets is basically what you're looking at. I think 2026 is going to be a problem. The rest of them, we're going to have to be selective and just go with the ones that are clear winners, because the winners are going to continue to win. Recovery plays are going to need more time. Yep. All good. Yeah, everybody, listen, hit the like, subscribe. I'll do one more, HPC 50. Okay, HPC 50 gets you a 50-day trial and 50% off. That is the absolute last one of the year. Okay, hit me there on the Discord. Everyone else, we're still going to do the trials. And hit me on the Discord, join our community there. Everyone else, get over. What's up, Mr. Towel? Flat iron, can't even read that. Fat Iron Towel, Plur 5406, you win. You got to send me a note, DM me on the Discord. Everyone else, take advantage of the TradingView username, TradingView trial. Send your TradingView username to hpc at sr-analyst.com. All right, and if you send me a note on the Discord, I will hook you up with the current discount of 25% or 20%. 25%. HPC 20 gets it. But that's what I have for this year, folks. Let's just be patient with the market going into the new year. I've laid it out. You know what I'm feeling on crypto. You know how I feel longer term on the markets, up. But we need another retrace like we did last year. So be aware of that. Stay patient. I'll be back on Tuesday, guys. All right? Have a great new year. Enjoy it. Until then, as always, go get them. We'll see you in 2026.